Welcome to the Ingrid Centurion podcast. I am retired U.S. Army Lieutenant Colonel, Iraq War veteran, Black Hawk pilot, and founder of Generations for America, Ingrid Centurion. In this podcast, we discuss America's constitutional battles and undertake in engaging and comprehensive interviews with legal experts, whistleblowers, and insiders. We uncover the stories that others won't touch, from government overreach to erosion of liberties. Each episode dives into today's most pressing issues and empower listeners with knowledge to protect their rights. No fluff, no spin, just raw conversations for serious times.
Welcome to the podcast. Today we're going to be talking about one of the biggest barriers preventing Americans from achieving that dream, and that's called credit. Millions of hardworking people want to buy a home one day, and building their credit score is what's holding them back. Today we're going to be talking with Myra Allen, who has helped many people do that, repair that credit, help them buy their home. And you know, there's secrets to this. There really are. So if you want to own a home and you want to know how to improve your credit, because your credit might be horrible. You're sitting there listening right now saying, oh, it's not achievable. It is. It is achievable with Myra Allen. She's going to share with us the mistakes to avoid. And please enjoy the show. Thank you for being on the show today, Myra.
Thank you for having me. Yes, exciting.
So tell us a little bit about your background and why is credit so important?
So about my background, I'm from Walterboro, South Carolina, born and raised. I have two children, ages 15 and 18. I'm also a grandma.
You're too young for that.
I know, right? So I actually, began getting into the medical field because I always knew I wanted to assist others, help others. I always had a passion for that. Well, the more I got into it, it's like, that's not for me. And it became challenging for me because I don't know how to separate my feelings or emotions, I would say. And I felt like, okay, this is not it, but I still know I want to help. Back in 2014, I started working from home, and I actually started working from home as an insurance claims representative. Went from that to working from home for a reputable income tax company, where I provided technical support. No, I did not prepare taxes at the time, but it was more so giving me the foundation. Did not know that was something I was going to take off in with business. So a year later, I'm like, okay, I think I want to open my own office and, start assisting clients with their tax returns. Luckily, I did. That opened one door. One door went from income tax preparation to 2017. I became an insurance broker. Again, assisting clients, bringing resolutions to their problems. After that, I'm like, okay, this is still not it, During COVID, a year after COVID, actually, the world was in chaos.
Oh, tell me about it. Oh my gosh. And I love your story because you have a great background and experience. You learned so much from the taxes. That is huge. People who are super wealthy, right? They know the secrets of taxes. They know the secrets of putting the money somewhere to gain wealth. So you have real experience here.
Absolutely.
And secrets, and that the average people don't have, right?
Yeah.
How many people do their own taxes? Not many. They go to somebody else.
That's correct. And I tell anyone, even when it comes to going into business for yourself, work as an employee first, because then you're going to learn the basics just by you being the worker. Everybody wants to be the boss, become the boss first. And it's almost like a chain line that you have to go down first. And that was me. I was like, okay, the world is in shambles right now. My credit, I'm, trying to get assistance from this person. That person is not working. I'm seeing in real time what I'm not getting, what responses I'm not getting. So I'm like, okay, let's go back. Let's take this thing from the bottom to the top. And this time I'm going to do it my way. So the things I was missing, I incorporated. So I said, well, I wanted a few guinea pigs, which were my family members. I said, well, can I use you guys' credit profile as an example of what I was able to help you guys accomplish? They said, yeah, Myra, you can do it. So I took about 5 of them, enroll them into my credit repair program behind the scenes. I did not launch anything off the top because I wanted to make sure I knew what I was doing. So once I started seeing the results, this was like August of 2020. I'm seeing the results. I'm seeing their improvements. Clients were, well, they were still clients. They were hitting the 700s club. And I'm like, wow. January of 2021, I actually ended up launching. 6 months into the actual business, I had someone that their landlord was wanting to sell their property that they were renting for 25 years. And he said, Myra, this is all I know. This is my life right here. I can't see myself moving. I don't want to buy anything else. I want this home. And I'm like, you're putting me up for a challenge. This soon in my business, I've never helped anyone secure property, anything like that. Again, I'm not knowing where this is taking me. So I actually assisted him. He was able to get his home. My biggest approval that year was 411,000 just for a home, just based off of the credit repair program that my client enrolled into. Again, I'm not thinking anything about real estate at that time.
Right, right. Now, the question is, why can a 50-point increase in your credit score save someone tens of thousands of dollars? And then my next question is, share with us, like, you took someone, how low was that score and what did you get it up to? Because I'm sure some people are like, oh, my credit is horrible. There's no hope for me.
And there is help. I mean, even a 50-point increase can help with your interest rate. Interest rates do affect your monthly mortgage depending on what the rate is. These 2 clients I'm talking about, one was in the 4s, one was in the 5s. Yeah. And, through our repair process, I'm teaching them how to even maintain their active and current credit cards because utilization plays a big part as well with your scores. And most people don't know that. You can have 70 points tied up within one credit card itself because of how you're using it. And most people don't realize that.
Oh, interesting.
Oh, yeah. Oh, yeah.
What score should people be striving for before purchasing a home?
620 is minimum. 640 is like superb. You're there. Yeah. So between a 620, 640. And typically, depending on your debt to income, your lender will let you know if your points needs to be higher.
And is it possible to buy a house with less than perfect credit?
It is possible. We've seen I've had lenders tell me, hey, I've gotten somebody approved with just a 590 credit score, but think about what that rate may look like at a 590 credit score. Even though that's in a 580, I believe is the lowest, but even if that is the lowest that you can go, we're in a time now where you should not just be focusing on, oh, as long as I get the approval, I'm okay.
Right.
Because sometimes that approval right where you're beginning can cost you later.
And so that's why you want to make sure that they improve it before
That is correct.
They get it. Okay. So very good. Important. You got to think long term.
Exactly.
Now, let's talk about the biggest credit mistakes that people make that they don't even know that they're doing with all these credit cards.
Oh, so biggest credit mistake with credit cards, opening up 8, 9 credit cards at one time.
I did not know that. I did not know that. Here I am at the mall. This was like 10 years ago. Like,
yeah,
they always ask you, right?
Yeah.
And I'm like, yeah, sure. And my credit score was going down. My husband was so mad. I did not know that.
Yes.
So remember, do not do that.
Yes. And really what you're affecting, what if you go late with a few of them, or what if it's, causing you not to be able to pay a lot of them under your 30% mark? Or what if the 8 credit cards you have, The monthly payments are small, but averaging all 8 of them together, that can be affecting your debt to income. And most people don't realize that either. They're like, oh, my payment is only $25 a month. Well, if you have 8 of them between $25 and $100, that, and we're not even including other debt, that's a big chunk right there. So you want to be careful with those credit cards, department store credit cards specifically, because we see a lot of times our clients, they end up losing them because they're not using it. And a lot of times too, you're thinking about, well, I don't really shop at Belts like that, but because I was approved, I'm going to go ahead and open it. Well, if you go too long without using it, the creditor is going to close it because there's no activity. And then you go to, if you're using it, now we're talking about using it not to have it closed, but now you're kind of like forcing yourself into debt that you don't have to have just to keep that credit card active. So you want to pretty much average maybe between 1 and 3 credit cards to your name, and actually making sure there's a need for that credit card. One you can pretty much spend anywhere if it came to it.
And how bad do late payments affect you?
Oh God. I use myself as an example for a lot of these things because first it started with me having bad credit. I remember about 5 years ago, that's when I first started credit. I was trying to buy a home, and my auto loan, I don't know, I was handling so much at the time, and my auto loan ended up reporting 30 days past due, dropping me 90 points. Yeah, 90 whole points while I'm trying to shop for a home.
Oh, wow.
And the lender specifically told me, well, Myra, it's going to take at least 6 months to recover from this 30-day past due. At the time, I'm not even understanding what he's saying. All I know is, okay, 6 months, what does that mean? Can I pay my auto loan up 6 months just to get out of this rut? No, I had to make 6 consecutive payments before I saw my score increase back to where it was. And a lot of times, based on what you're losing, even if you've made 6 payments on time, you're not probably getting back all of what you lost. So imagine you having a $25 missed payment and your scores drop 70 points. Now I have to wait 6 months to redeem myself all over a $25 missed payment. And that is literally what happens.
Now, tell us about co-signing loans. Do you recommend that? Do you not?
I do not ever recommend co-signing on a loan because number one, you're just as responsible as the person that's on the loan with you. I don't know how many times I'll have a client come and, they're like, I'm in this because of this person, and, a lot of times we see it happen over divorces, boyfriend, girlfriend living together, those type of things. But encourage that person to get their own credit together instead of you accepting that debt as part of your now responsibility.
And I know people listening, you want to help someone, and this is where you get caught into this. I know you want to help this person, but this person has showed irresponsibility in the past. This person got to where they are because of their decision making. I think that's the big thing. We want to help.
We do want to help.
You have to realize that you're saying it's a loving no. It's a loving no. And, they're to repair their credit. It's on them.
Oh, yeah.
What surprises you the most when you first review someone's credit report?
Payment history. A lot of times I see payment history as a struggle. And then that's why, too, I take it upon myself to educate my clients on budgeting. Just because you can get approved, you have to ask yourself, does it fit? If it does not fit, I don't care if it's $300 that you're accepting on additionally as a monthly payment. Does it fit? How is your spending now? What bills are we looking at now, based on your credit profile? And depending on that and the income that's coming in, nothing else can't fit. And that's what we see so much of. Late payments. We see a lot of credit card debt. Those are my 2 most popular. Late payments and credit card, overutilizing on your credit card. That's my top 2 that I see. Late payments can be corrected, but let's not forget student loans. I've been seeing so many clients hit with student loan debt. Um, and a lot of times with the student loans, they won't give you a courtesy late payment hit. And what I call courtesy 30 days past due. They're going to hit you at one time 120 days past due, which can potentially drop your scores at least 200 points.
Wow, that's a serious one.
Oh, yeah.
Wow, okay.
Just because they're not calling or harassing does not mean that debt does not exist.
Share
Yeah.
with us these myths about credit. We want to clear them all up right now, and that's huge.
Oh, yeah. So I've been told checking my credit drops my scores. So that's not true. Any credit monitoring site that you decide to enroll into to monitor your credit, monitoring your credit means reviewing what's on your credit profile, reviewing your scores, reviewing how well your active accounts on that profile or open accounts on that profile is functioning. Your scores are not impacted just because you decide that you want to enroll into credit monitoring. Now, a finance company checking your credit, yes, scores will be impacted from that. You will notice a slight decrease in your scores whenever a creditor is checking your credit, and normally that's due to you trying to get some sort of financing. I've even been told, hey, what if I make 3 payments in 1 month? Is that going to increase my scores? No, it's not. You only have one due date and one reporting date. Your due date is for at least your minimum payment that needs to be made. The reporting date is when the credit card balance reports to all 3 of the credit bureaus on that specific date. Now, let's say by your due date, you've made the minimum payment, balance is still a little high. Well, you can at least make another payment on the credit card at least 2 days before it reports, so that the correct balance can reflect in time on the reporting date. So that's a great tip right there as well. Most people don't make the payment at all because they're like, oh, well, it's not going to do anything for me. I'd rather you make the payment so that you won't have a late payment penalty following you as well. And if for some reason you can't get the balance down to where, it falls under 30%, at least the payment has been made. And then we can try again the next month when the new reporting date comes about again.
Now, what can someone realistically accomplish in 90 days?
Realistically, someone can accomplish their entire credit profile being cleaned up. They can accomplish an increase in their scores. They can accomplish being disciplined with their credit card usage. Some people just don't know how to use a credit card. And if you don't know, it's not like you're going to dive in completely. I've had most people, they felt like and that was me as well. As long as I'm making my credit card payment on a monthly basis, it's reporting to the credit bureaus, I'm good. No. So I had to understand it's not just a payment, it's me actually keeping my balance under a certain percentage to even have my scores reflecting where it should. So those are things I feel like, should be focused on within those 90 days. Improving profile, increasing scores, understanding what types of accounts you have reporting to the credit bureaus, such as revolving and installment accounts, how they impact. Within 90 days, most of my clients are knowledgeable enough to know how to maintain their profile after we're done working. If we target the credit bureaus, aggressively in the beginning, we normally get where we need to be a lot of times within 30 to 60 days. Now, if it's late payments that we're disputing, a lot of times it's going to take those full 90 days.
Now, let's talk a little bit about what got you there, because you said you started with, you had bad credit. So I want to talk about the education system a little bit. So our kids today, what generation here is Gen Z? Are they all up on this? Are they making mistakes? Are we leading these kids down what is the education that you feel you should have had so you wouldn't have been in this position?
So the education I did not receive coming up was about credit cards, cell phone bills. We see a lot of times, especially graduating high school, first thing you do, you're going off to college. If you're not on your parents' cell phone bill, then you're probably trying to get your own thing going on. Now, my mom did advise me of, hey, don't you abuse your credit. but it wasn't thoroughly taught what I should not have been doing. So, I'm signing up for credit cards just because I knew I could get approved. I'm spending without, and I'm young, so I'm spending without any thought of paying it back. Hey, they gave it to me. That was my thought process. What I'm teaching my parents now that are actively enrolling into my programs, I'm letting them know, if you have kids, pass this information. If you need me to educate your children or your child outside of our consultation, bring them on the line. Let's see what they have going on. I do not recommend having your 18-year-old assume a car payment at such an early age, because I see that that's a big mistake, that I'm always seeing being made. Okay, you've added your daughter or son as an authorized user. Coming out of high school, they have a 700 plus credit score. Well, just that authorized user trade line alone on their credit report, and I don't know if most people know what that is, but that's you adding someone to your credit card to piggyback off of payment history, utilization, how long that credit card has been open. All that gets transferred over to the, let's say, myself's credit profile. If Ingrid, you added me as an authorized user for Capital One. Capital One has been open for 10 years, no late payments, $10,000 credit limit. Utilization is at 3%. You've added me. Now that information transfers to my credit profile. So now I have history, but I don't have anything primary because I'm just 18. I don't have anything primary in my own name. So I think most parents forget that part too. Yes, you're adding them as an authorized user. Yes, you're giving them all this history on their credit profile, but we need a primary trade line to show what they're responsible for in their own names.
Very good.
And that's what they miss a lot of times.
All right. Let's talk about preparing to buy that home, because that's also your secret. You've learned all this on credit repair.
Yes.
Let's talk about home ownership, because I know we have a generation that feels like, I'm never going to be able to buy a home.
Yes.
Let's change that myth.
Yes. So most people feel they can't buy a home because they're not educated. They're looking at everybody else's process but their own. And there wouldn't be a process if you have not started one. So with myself, I had bad credit. I had to start there first. I had to repair my credit. I had to understand saving. That was a big deal for me. Saving, getting my credit together, income. Just because credit scores are high, just because we're in a market, let's say, to buy. How is your income? How well are you saving? What are you doing differently than you were doing actually? So we want to get more influence too, with talking with a lender, talking with a credit repair specialist. Me personally, I work as a team because I feel like my team actually knows what's going on. A lender is always involved in home buying. Credit repair specialists and me as the realtor, I'm making sure we're all communicating. So first things first is finding out what your credit profile looks like. Once we have determined that, and I have 3 check boxes that I normally have my clients check off when they first speak with me. Income, so we're making sure job stability is at least 2 years. We're making sure that credit is intact. If not, here I'm here to help. And we're making sure you have a savings for a down payment. They do have down payment assistance programs, but does everyone qualify? No. Sometimes down payment assistance programs can affect your interest rate. So those are things you would need to know as well before saying, hey, I don't want to have to put anything down. If that is the case, are you okay with what comes behind that?
Now, here's a question in reference to what are lenders looking for that most people don't know?
Ooh, so recently we had the issue of like Klarna. So Klarna, Afterpay, those type of, get the product now, pay later. No. So just because it's not showing on your credit profile, a lot of times what most buyers miss is showing on their bank statements. So anything dealing with financing or loans, that's the underwriter's job to see what's being paid out. What else are you obligated to that's going to affect you getting into a mortgage? So that's one thing we definitely see that's a big issue. Co-signing.
We talked about that one.
Yep, co-signing. We see that as an issue at times with some of our buyers. Even purchasing a brand new car, let's say a month before you're trying to buy a home. That's too recent. We always suggest after you close on your home, then if it fits, and I know a lot of people like to have the brand new car, brand new home, that type of thing, which is fine if it fits, you know. But lenders are mostly looking at that job stability, those 2 years on that job. And they're looking to see what other obligations you have past what they're seeing on your credit profile.
And what's one mistake you feel that's costing these people a chance to buy a home every single day? What is that one mistake?
Debt. It's definitely debt. Including myself, I didn't realize until my lender pointed it out to me how much debt I was actually responsible for on a monthly basis. And I'm like, oh my God, those small payments do add up.
Mhm.
And it was just outrageous. And I'm like, okay, tackle this first, then come back. And that's exactly what I had to do. I had to circle back around once I finally had those things. And I think that's what makes home buying frustrating. When you have to take bits and pieces of information from this place, that place, and put it all together. And that's why I have a one-stop shop. I'm a realtor. I'm a part of the brokerage, the Real Estate House International. I'm a credit repair specialist. I also provide income tax services as well. So for those that are self-employed that are wanting to purchase a home, it's really not a good idea to write off a whole lot of expenses, because that actually, comes into play with your true income really showing after expenses have been written off. So self-employment, that's another, hurdle that we have to get past a lot of times with our buyers, because they don't understand, what income truly needs to be showing to buy. I might have made 100,000 for the year, but after I wrote off 40,000, in expenses, here I am left over.
And that's why what you're doing is so important. I really like the aspect of, fix that credit, whether you have a business or you don't have a business.
Yes.
And then you're staying with this person, you're giving them the coaching, you're making sure you're
Yes.
doing all these things that they need, because this is discipline. This is financial
Absolutely.
discipline. You're like the financial discipline coach. Plus, let me help you accomplish your dreams by buying your home. And that is important because there are a lot of realtors out there, but there's
Absolutely.
not a lot of realtors like you with your expertise and knowledge. And I really appreciate you for being on the show today to discuss this, because
Yes.
I really want to see people buy homes. I think
Absolutely.
that's a great thing, that what you're doing.
Yes, like I feel like buying a home is a different form of luxury. You're possessing something that you probably thought would never happen. You're showing yourself that now you've unlocked this next level, because someone may be okay with letting their car go back for whatever reasons, but you're not going to let your home go back. You're absolutely not. You're going to do what it takes to keep it. And that's why I like to being able to offer pretty much everything that involves home buying, because now I don't have to worry about my clients being confused about what's happening during the process. If too many people are in your ears when you're trying to buy a home, that's number one, what's going to get you discouraged, because they're giving their horror story on what happened, and that may not be your story. They may be telling you this location is not the best for you, when in all actuality, it may be the best for you. So like I said, when you're working with someone that's knowledgeable, that knows every end when it comes to tying in with home buying, your experience cannot just not be what you're looking for, because all your information is here. Instead of me saying, hey, I got to send you over to Jane, that offers credit repair. And what if Jane doesn't communicate that well? Now I'm in the dark about what's going on until I'm like, okay, it's been a long time here. What's going on?
And so imagine someone who is listening right now and they're discouraged and their credit score is low and they think they'll never own a home. What would you tell them?
Come see me.
That's right. Tell us your address, tell us your number, tell us your email, your website, all that stuff.
Yeah, so I offer virtual services. That goes back to when I first started working from home. Being able to talk and assist other clients in all states. And I incorporated that with my own business. I'm like, I don't want to just, I live in the Somerville market now. So I'm like, I just don't want to service where I live. I want to be able to help someone in Texas if need be. And I've touched a whole lot of states with my services. My oldest client is 74 years old in Virginia. And I was actually able to assist her with educating her on credit. Her husband is deceased, so everything was pretty much on him and his knowledge, and that kind of left her in a bind where I don't know anything. Help me, teach me, and I did that. So yes, so all my
That's
services.
awesome. She
Thank
must have
you.
been so happy. I know people dream of having their own home. I mean, that's
Yeah,
something that's really important to them. And I think some people who've never owned a home feel sometimes like, I don't know, they just feel like they've never accomplished anything. That owning a home is such a major thing. And also so sad to see people lose their homes.
absolutely. I would say what scared me in the beginning of home ownership was me looking at the sales price of the home. And I'm like, oh God, I would never be able to afford this. And the lender is not looking at you having 400,000 in your bank account or 250,000 in your bank account to buy this home upright. They're looking at over the course of 30 years, would you be able to maintain a payment based on the sales price of this home? And I think that's what scares a lot of people off in saving, because saving your money requires discipline. But if you're a VA buyer, no, that's a no down payment program for VAs. If you have a 401k plan, you can actually withdraw from that to assist with your down payment or closing costs. And most people don't even realize how much they have in their 401k, how much is available for them to remove to buy or put down for their down payment. So you have options. Or if we have to organically save, and come up with that strategic game plan on how we're going to save and how much per month to get you there, then that's an option as well. So don't allow homeownership to, cause you to run away. We now know what most rental properties are going for on a monthly basis. And a lot of times that is a huge jump from what someone may be paying in rent to now owning a home. So now it's like, do I really want this? That's what you have to ask yourself. It's not, can I do it? Because we have solutions. So now you're asking yourself, do I really want this?
Well, thank you so much for sharing your expertise and your knowledge with us. We're
Sure.
looking so forward to hearing you tomorrow speak in person at
Yes.
the Powerful Women in Business ABWA, American Businesswomen Association meeting at Cumulus Radio at 6 p.m. So for everyone out there, we've been encouraging everyone to come hear this in person and reach out to Myra Allen. Thank you so much.
How many city council meetings have you attended? How many outrageous meetings have you attended and you were afraid to speak up? Well, it's time you master Robert's Rules of Order. We do training at Generations for America, and you will learn what is a deliberative assembly and how organizations create rules to conduct business. Roberts is about protecting the rights of its members, of the majority, of the minority, especially a strong minority greater than 1/3, of individual members, and of those absentees. Stop allowing a small group of people to create crazy rules and running organizations. You have the right of a member to speak up. Our next session will be September 4th through October 2nd. We do this by Zoom from 7 to 9 p.m. Register today at generationsforamerica.com. Thanks for listening to the Ingrid Centurion podcast. Be sure to join me every week as we bring you inspiring guests, facts, and hard-earned lessons. Find us on iHeartRadio, Spotify, Apple Podcast, or in your favorite podcast app. If you would like to be a guest, get involved, or find out about sponsorship opportunities, reach out to us at ingridcenturion.com or generationsforamerica.com. You'll be glad you did. Thank you, and we'll see you next week, so tune in for more conversations.